welcome to our session today. I am your instructor, CPA Aringo Frederick. In our class today, my good students, we are going to look at a very important concept, which is very important for our career as accountants, and also very important for the purpose of our examinations. And the concept that we'll be handling today, it is known as consolidation, group accounts. This is according to IFRS, International Financial Reporting Standards number 10, or International Accounting Standards number 27. So that is what I want us to analyze in our session today, understanding the whole concept of groups. So that should take us straight to understand, or rather it will be very important for us to understand when we're talking about this consolidation, basically what do we mean? At this point, I want us to take it on a layman's perspective, with the definition of consolidating something. Consolidating means that we are bringing these items together. I'm bringing them together. I am consolidating. I am bringing them together. So in the context of group accounts, you'll find that companies probably will be having other companies that we are controlling. I will be having, say, a parent company and maybe some subsidiaries. Take subsidiaries as our children. I'm having a parent and I'm having a child. Of course, parent will have a control over his or a child at some point, right? So you'll find that for the purpose of reporting, I must report all these entities as one entity. I'll take all our children, or rather take all my children wherever they are together. I bring them in one house, so that whenever I'm accounting for this, I'm going to account as my family. This is a family. This is one family. So that is what you're talking about, groups and its subsidiaries. So take subsidiaries as the children of the parent, whereby I'll be having a parent and I'll be having companies that you are controlling. So bringing them together is what we'll be terming them as consolidating, meaning that we are consolidating our various companies that we are controlling together. So in that case, my good students, even before we proceed, I'll wish us to understand some of the key terminologies which you must always tend to have at the back of your mind. And these terminologies, you can term them as key definitions. Key definitions, key definitions. And the moment you are able to understand these key definitions, you'll find that handling group accounts, it will be very, very easy for us. And you'll also be a witness on that. The moment you'll be able to understand the concept that I want us to look at in our session today, you'll find that going forward, group accounts will be very, very easy. So, number one key definition that I want us to talk about is, whenever we're talking about group accounting, basically, what do we mean? Group accounting. Anytime you're talking about group accounting, basically, what should click at the back of your mind? And the beauty part of it is that already we've given the concept behind it, right? So group accounting, basically, we're looking at group accounting is bringing together separate entities into one reporting entity. That is what you're terming it as what? As group accounting. Maybe just to put it down, you are saying that it is bringing together. This is a group accounting is bringing together, bringing together, bringing together, bringing together separate entities. Separate entities, separate entities, separate entities into one, separate entities into one reporting entity, into one reporting entity, into one reporting entity, into one reporting entity. So basically that is what you are looking at what? As group accounts. That is what you are looking at what? As group accounts. Bringing together separate entities into one reporting entity. And you find that the main objective of preparing group account is to present the financial statements of the parent company and its subsidiary companies as if they existed as one economic entity. That's the main objective of us preparing our group accounts, is to bring all these parent and subsidiary companies to report them as if they are existing into one economic entity. So that is what you're terming it as what? As group accounts. Bringing together separate entities into one reporting entity. And in this context, we're talking about bringing together our subsidiaries and parent and reporting them as one entity. Other terminology, we've talked of subsidiary. Now, it will be very important for us to understand what is this subsidiary? What is this parent that we are talking about? So terminology number 2, we are talking about parent. Talk about the parent company, parent or holding company, parent or holding company. It will be very key for us to understand this term. This term will be very common as we continue with the concept of group accounts. So parent company basically, or a holding company, we are talking of it as the company that controls one or more entities. This is what we are terming it as what? As a parent or holding company. We are saying that this basically, my good students, we are talking about refers to a company that controls, refers to a company that controls more than one, controls one or more entities, one or more other entities. Basically, this is what you are terming it as what? As a parent or rather holding company. Refers to a company that controls one or more other entities. Basically, that is what you are looking at as a parent or rather holding company. Remember this point on group, we mentioned that we'll be bringing together the parent company and its subsidiaries. So it will also be very key for us to understand anytime you're hearing about subsidiary, ideally, what do we mean? So that should take us to terminology number 3. In that case, it will be very important for us to understand what we are terming it as what? Subsidiary. Subsidiary. It will be very important for us to understand what you are terming it as subsidiary. So what is a subsidiary, my good students? At this point, subsidiary basically you'll find that refers to an entity that is controlled by the parent company. Refers to an entity that is controlled by the parent company. So we are saying that this refers to an entity, that is controlled by a parent company. Basically, this is what you are talking about. Subsidiary refers to an entity that is controlled by a parent company, as simple as that. And for us to say that we are controlling this subsidiary, you'll find that this is where the parent controls more than 50% of the shareholdings. And actually that one you can put in essence. For us to term it as control, we are saying this is where the parent is controlling. This is where the parent is controlling more than 50% of the shareholding, So this is where we are going to term it as what? As a subsidiary. I'm having control of that. In the event whereby a parent company, remember we've seen what a parent company is. In the event where a parent company is controlling more than 50%. And whenever we're talking about more than 50%, of course, you're talking of 50 plus. 50 plus. Should it be 50 plus 1, 50 plus 2, so long as 50 plus of the shareholding of a parent, or rather of the shareholding of that company, that's when you are going to term it as what? As a subsidiary. Then, at this point, bring all these items together. Parent and subsidiary. So, that should take us to terminology number 4, which will be very important for us to understand. This time, talk about group now. In this context, let us talk about group in the context of financial reporting. Basically, that is what you're analyzing. So group, basically you'll find that it refers to the parent and all its subsidiary companies. So you're saying that this one, it refers to the parent, it refers to the parent, it refers to the parent and all its subsidiaries, and all its subsidiaries, refers to the parent and all its subsidiaries, and all its subsidiaries companies, and all its subsidiaries companies. So basically that is what you're terming it as group. See at that context whereby you've said that at this point we've talked of the aspect of bringing together subsidiary and the parent. Now bringing them together, that should give us what is known as group. And the beauty part of it is that we've been able to understand this terminology. And at this point, I'll want us to always be very keen with this term. For group, kindly don't tend to cram, but instead understand the concept right. If you get the concept right, you'll find that it will be very, very easy for us. Now, at this point, that should take us to the aspect of anytime you're talking about control, basically, what should we be looking at? Because you're saying that for us to term it as a subsidiary, you'll find that a parent company should be controlling that other company with a percentage shareholding of more than 50%. So that should take us to terminology number 5, which in this case, it will be very important for us to understand the term control. The term control. Anytime you're talking about control, basically, my good students, what should we understand? So, anytime you're talking about control, as per IAS number 27, control is presumed to exist when the investor controls more than 50% of the voting power of the investee company. That is where we are going to say that control will exist, where the investor company controls more than 50% of the investee company. That is according to IAS number 27. But you'll find, my good students, other than that, there are circumstances which again will show that we are controlling a particular company. And in that case, you'll find that circumstances when control exists, when the investor controls more than 50% or less, they include the following. Number 1, at this point, we are saying that there could be scenarios where the investee company will be controlled either 50 or less than 50%. But so long as these scenarios do exist, you'll find that that will indicate that you do have what? You do have control. Circumstances number 1 that you must have at the back of your mind to show that other than us controlling more than 50%, in the event that the investor has power to participate, in the event that if the investor has the power to participate, has power to participate in the operating policies, talk about the aspect to do with financial policies or financial policies in the investee company. So you're looking at a scenario whereby the investor has power to participate in the operating policies, financial policies in the investee company. Basically, at this point, what you are looking at, in the event that I'm given that power to participate, of course, in the policies, and you know very well that policies, these are what will run, or rather, this is what is running the organization. So in the event that I'll be given, this power to make such policies, that will definitely indicate that I'm having control on something, right? Or rather, of the company. Number 2 situation, my good students, that you can also talk about is, talk about if the investor has power to appoint, has power to appoint, if the investor has power to appoint, if the investor has power to appoint or remove a majority of the member, or remove a majority, or remove a majority of the member, or remove a majority of the member, or remove a majority of the member, or remove a majority of the members of board of directors in the investee company, of board of directors of the investee company, of the investee company. This will clearly depict that we do have control of that company. This will clearly depict that we do have control of that company. So these are situations, my good students, that apart from us holding 50 and more percent of the shareholding of the investee company, if this situation occurs, you'll also find that it will depict that you do have what? You do have control of that company. You do have control of that company. Now, another key element, again, that we should understand amongst our terminologies is terminology number 6. Terminology number 6. Here, we are talking about what is known as what? NCI, non-controlling interest. Non-controlling interest. Non-controlling interest. Term it as NCI. A very important concept, again, that we should also be able to understand anytime we are talking about group accounts. So in this context of NCI, again, what should we be able to recall and always have at the back of our mind, my good students? So you'll find that NCI, or rather non-controlling interest, represents the portion which remains not acquired by the parent in a subsidiary company. I repeat my statement again. Mwalimu is saying that anytime you are talking about NCI, or rather non-controlling interest, basically we are looking at the portion which remains not acquired by the parent in a subsidiary company, meaning that it is a portion attributable to the minority shareholders. It is a portion attributable to the minority shareholders. We can put it down, because I know majority of us will love if we put it down, so that it should remain in our probably the back of our mind. And this is what Mwalimu is saying, that NCI, this represents, it represents portion which remains, it represents portion which remains, portion which remains not acquired, not acquired. It represents portion which remains not acquired, not acquired by the parent in the subsidiary company, by the parent in the subsidiary company, in the subsidiary company, in the subsidiary company. So we are saying that it presents a portion which remains not acquired by the parent in the subsidiary company. And if you can recall, we've talked of a subsidiary. And we say that a subsidiary is a company whereby the parent is holding more than 50% of the shareholding. So take, for example, this scenario, my good students. At this point, maybe I'm having a parent company. We've acquired a subsidiary company, where in this case, percentage of acquisition, maybe you are talking of 70%. P, which is parent, has acquired S, which is a subsidiary, and in that case, our percentage of acquisition, or rather shareholding component, is what? Our shareholding component at this point, you're talking of what? 70%. There will be a portion, which is 30%, that will remain, maybe at this point, not acquired by the parent company. So this portion that the parent company has not acquired is what now we are terming it as what? As NCI. The portion that the company has not acquired, which in this event you're talking about 30%. So this is what we are going to term it as what? As NCI. So that again is a concept that we should be able to understand very well anytime you're analyzing group accounts. the portion that will remain unacquired by the parent company on the subsidiary is what you are terming it as what? As NCI. So kindly let that stick at the back of our mind anytime you're talking about NCI. Now, the moment you are able to understand that case, my good students, that should take us to a component known as what? Associates. That should take us to a terminology which again you must be able to understand. Here we are talking about number 7, and number 7 are talking about associates. So number 7 talk about what? Associates. Associates. Talk about associates. So that is what you're talking about, associate, an associate. Anytime you're talking about an associate, my good students, what should we be able to understand and recall? That's a big question that we should always tend to ask ourselves. An associate. This is what you must always tend to have at the back of our mind. An associate, and I want to mark it very clearly, it is an investee company where the parent controls 20% but not exceeding 49% of the shareholdings. I'm repeating that again, my good students. You are saying that an associate, it is an investee company where the parent controls 20% but not exceeding 49% of the shareholding. At that point, Mwalimu will have to explain it very well. But first of all, let us put it down. We are saying an associate, it is an investee company. It is an investee company where the parent controls, or rather which the parent controls 20% but not exceeding 20%, but not exceeding 49% of the shareholdings. 49% of the shareholdings. So basically that is what you are looking at, what? As an associate. And at this point, I want you to relate to the subsidiary. Like for subsidiary, we mentioned that the company is controlling 50+% of the shareholding. An associate, my good student, we are saying that at this point the company should control at least, so we are talking of between 20% and 49% of the shareholding of the company. So at any given point, whenever we'll be given a scenario and you've seen a company is controlling between 20 and 49%, what should click at the back of your mind is that we are talking of what? We are talking of an associate. So again, this is one thing that should tend to click at the back of our mind always. Because I'm telling you guys that at this point, we are learning the concepts. It's not all about knowing how to compute. It's not about cramming the concept that this is what you're supposed to do and this is what you're supposed to do. The most important thing is for us to grasp the concept right. And the moment you're able to understand these definitions, you'll find that it will also be very easy for us to always kind of what? Understand the concept that I'm given in an exam situation. So after we've talked about an associate, my good students, it will also be very wise and very important for us to look at another terminology. And this terminology also will affect us as we continue. And we'll be talking of what? A joint venture. Talk about joint venture. We'll be talking about joint venture. So that is terminology number 8. Joint venture. Talk about joint venture. Just from that word joint, we are owning this thing together. We are owning this item together. Joint. So in this context, you'll find that at this point, I'm having an investee company where the parent is jointly owning that company with another company, meaning you're talking of 50%. So a joint venture is an entity which a parent company controls 50% only, exactly 50%. So joint venture, we are saying that is an entity where the parent company, it is an entity where the parent company controls 50% of the shareholding. 50% of the shareholding. 50% of the shareholding. 50% of the shareholding. So basically this is what you are terming it as what? As a joint venture. Is an entity where the parent company controls 50% of the shareholding. 50% of the shareholding. That is what you're terming it as what? As a joint venture. I know at this point someone will ask, Mwalimu, what about that company where the parent is controlling less than 20%? How are we going to call that company? Because at this point, if you realized, we've looked at a subsidiary 50 plus, an associate between 20 and 49, and joint venture, we're talking of exactly 50%. I know a person will be tempted to ask, Mwalimu, what about that company that the parent is controlling less than 20%? And that is what I want us to look at right now. And that should take us to simple investment. That should take us to terminology, the other terminology, which is number 9, simple investment. So number 9, we are talking about simple investment. Simple investment. Talk about simple investment. Simple investment. Simple investment. Simple investment. So a situation whereby you'll find that this is where a parent company is controlling less than 20% of that company. So a simple investment is an investee company in which the parent controls less than 20% of the shareholding. Less than 20% of the shareholding. Less than 20% of the shareholding. So this is what you're terming it as well, a simple investment. So the moment we'll be able to grasp these terminologies, my good students, the moment we'll be able to grasp these terminologies, you'll find that moving forward, things will be very, very easy. Things will be very, very easy. Now, the next concept that we're also going to analyze, this will be the concept to do with the group structure. But before that, let us do a summary on what we've just studied right now. Let us do a summary on what we've just studied right now, so that always we should be able to recall these concepts. So, the main elements that I'm going to look at, we are talking about subsidiary. So for subsidiary, recall, we've said what? This is where the parent company is controlling more than 50%. So 50% plus. An associate, this is where the parent company is controlling between 20% to 49%. We're having a joint venture. This is where a parent company is controlling exactly 50%. And you're having simple investment. This is where the parent company is controlling. We are talking of what? 19% going downwards, meaning that 20% and below. 20% not included. So you're talking about 19% and below. So basically, this is 19% and below. So this is where we are talking about what? The aspect of main elements that you must always tend to have at the back of your mind anytime you're handling this concept. Now, the moment you are able to understand that, I'll be very comfortable to go to the next concept, which should also tend to be very important anytime we'll be analyzing this concept, and that will be group structures. So at this point, Mwalimu will want to talk about the group structures. Again, it will be very important for us to analyze the whole concept of group structure, so that as at the end of the day, it will be very, very simple for us. So to this point, my good students, I'll want us to meet in the next session where we are going to analyze the group structures. Thank you so much, and let us meet in the next session. Thank you.